Hi guys. Today we will analyze General Dynamics stock, and calculate its intrinsic value using two different valuation models. Enjoy! Hit the like button and subscribe to my channel if you want to see more videos like this. Technical analysis. The stock has been an average performer in the overall market. Also recent evolutions are not positive. The long-term trend is still neutral, but the short-term trend is negative. Strong support level is around $215 and $205. Next strong support levels are around $193 and $185. Strong resistance levels are around $223 and $230. Next resistance level is around $248. In the last month the stock has been trading between $210 and $247 range, which is wide. It is currently trading near the lows of this range. The stock has an average volume of 1.5 million. This is a good sign as it is always nice to have a liquid stock. Intrinsic value. Buy low, sell high. We have heard it many times before. But how to know when it's low, and when it's high? The intrinsic value of a stock is its true value. It refers to what a stock is actually worth. Even if some investors think it's worth a lot more than that amount. Intrinsic value is important, because it can help investors understand whether the cost of a stock is undervalued, or overvalued compared to the market value of the stock. Let's calculate the stock's intrinsic value. For more accurate results, we will use two different valuation models to calculate the intrinsic value of the stock. Discounted free cash flow model, using the formula below, then, valuation based on earnings per share, 5-year average P/E ratio and expected growth rate. First model. Discounted free cash flow valuation. This spreadsheet contains some financial data that we will use for the stock valuation. We see that the average revenue growth rate of the stock has been around 5% per year, for last 5 years. We see that the average profit margin of the stock has been around 9% per year, for last 5 years. Also we see that the average free cash flow to net income rate of the stock has been around 88% per year, for last 5 years. And we expect 8% per year average stock market return. Now, let's consider 3 different scenarios for General Dynamics Company: bad, average, and good. First scenario. General Dynamics will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be a low, 3%. Future profit margin would be a low, 8%. Future free cash flow to net income rate would be a low, 70%. In this case, the fair value of the stock today would be $175. Second scenario. General Dynamics will have average performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be average, 4%. Future profit margin would be average, 8%. Future free cash flow to net income rate would be average, 80%. In this case, the fair value of the stock today would be $208. Third scenario. General Dynamics will have high performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be high, 5%. Future profit margin would be high, 8.5%. Future free cash flow to net income rate would be high, 90%. In this case, the fair value of the stock today would be $257. Second model. Valuation based on earnings per share. This spreadsheet contains another financial data that we will use for the stock valuation. The current earning per share price for the company is 11.68. Minimum rate of return. I will use 10%. Because when we invest in individual stocks, we are looking for a higher return than the S&P 500. For General Dynamics, analysts forecast growth rate around 5% per year in next 5 years, and future P/E around 18. Again, I will use 3 different scenarios for General Dynamics Company: bad, average, and good. First scenario. General Dynamics will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be a low, 3%. Future P/E would be a low, 16. In this case, the fair value of the stock today would be $103. Second scenario. General Dynamics will have average performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be average, 4%. Future PE would be average, 19. In this case, the fair value of the stock today would be $134. Third scenario. General Dynamics will have high performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be high, 5%. Future PE would be high, 22. In this case, the fair value of the stock today would be $169. As you can see, today the stock is overvalued, $219, even if we expect the company's high performance in future. While the company has a good profitability rating, there are some minor concerns on its financial health. While showing a small growth rate, the stock looks overpriced at the moment. I own the stock, my cost basis is around $170, and I like it. I buy more every time when the stock drops below $180. Company's strengths. General Dynamics Corporation is a leading American aerospace and defense corporation. It consists of 10 subsidiary companies with operations in 45 countries. The company's products include business jets, nuclear-powered submarines, guided missile destroyers, M1 Abrams tanks, and Stryker armored fighting vehicles. The rising geopolitical tensions around the globe translate to a momentum in defense stocks. General Dynamics focuses on Department of Defense's high-priority, advanced technology programs, which tend to avoid cuts even when defense budgets decline. Technological expertise and a large order backlog provide an adequate economic moat for General Dynamics. Its marine segment has decades of revenue visibility, thanks to the long-cycle nature of shipbuilding. The stock has a yearly dividend yield of 2.29%, and the dividend is nicely growing with an annual growth rate of 8 to 10%. The company's return on assets of 6%, return on equity of 18% and profit margin of 8.5% are amongst the best returns of the industry. Risks. General Dynamics is a key supplier to the U.S. military, approximately 2/3 of sales, and thus vulnerable to debates over, and potential cuts in domestic and international defense spending. The company is subject to a range of procurement laws and regulations, and evolving U.S. government procurement policies and increased emphasis on cost over performance could adversely affect General Dynamics' business. The defense industry is competitive, with other deep-pocketed players. The business jet market is affected by global economic and financial trends, which are outside of the management's control. There is environmental, social and governance risk to the firm from the nature of the company's business model. The company is a defense contractor that produces cutting-edge technology for military purposes, which is a somewhat controversial business. The company is expected to show a small growth in revenue. In the coming 5 years, the revenue will grow by 5 to 7% yearly. The company is expected to show a medium growth in earnings per share. In the coming 5 years, the EPS will grow by 8 to 10% yearly. Thank you for watching. If you found this video helpful, please hit the like button and subscribe to my channel.